The gold price has been creeping past all-time highs. And the reason I use the word creeping is because seemingly nobody is talking about it. Can you imagine if 2 years ago the gold price had passed $3,000? I feel like the entire world would have lost their mind. But here we are, and all we're hearing is crickets from the mainstream media. My guest today has an idea as to why, and I think what he has to say is going to surprise you. This is Andy Schectman of Miles Franklin. Welcome to the VRIC Media Channel, the most trusted voice in the metals and mining industry. Here's Andy Schectman.
This is Jay Martin.
All right, I'm back with Andy Schectman. Andy, it's great to see you, man.
It's great to see you too, Jay. Thanks for having me, buddy. Sorry I had a hard time connecting with you yesterday. Call it user error on my part.
No, it's all good. We made it happen. Here's where I want to start with you. You've always got an interesting take on sort of current events and headlines. So there's a lot of people obsessing right now about what is in the news this morning, this afternoon, whether it's tariffs, what Trump said, et cetera, et cetera. What are you paying attention to right now from a macro standpoint? What do you think people are misunderstanding? And then I'm just going to pull on some threads and we'll open it up from there.
I mean, there's so many macro things to look at. Tariffs and certainly to me are more of a distraction than anything.
No, why do you say that? Why do you go there? Because I agree with you. I'm curious as to why you went there right away.
Because I just think that they are. I think, look, it's one thing you can look right at it and say, yeah, it's not fair that we the United States has to pay tariffs when the other nations don't. And I don't know that I really believe that, to be honest with you. The idea that the world should pay tariffs to us for the privilege of doing business and they're selling us their goods kind of ignores the bigger picture. To me, the bigger picture is the countries that are keeping our system afloat by buying treasuries and using the dollar as a global reserve, which keeps rates low in this country, which what he wants, which keeps asset prices high, which is what everyone wants, which keeps goods cheap, which is what everyone wants, are the countries that we are attacking, so to speak, you could say, with these tariffs. And so sure, the trade gap looks ugly on paper. Is it ignoring a bigger trend? And but by tearing it all down without understanding the plumbing, to me, is not a smart idea, but it's distracting from some of the bigger things that are going on right now. And if I were to bring it home to my industry, to the physical precious metals market, you know, you have gold at $3,300 and no one knows it. It's so quiet, but yet the U.S. has become a net importer of gold since November. Almost 60 million ounces have been delivered, mostly from London since November. What is gold but the only other tier one reserve asset in the world? Who's been buying it all? Who have I been screaming since 2020 has been buying it all? The most well-informed traders in the world, the central banks. Who's been repatriating it all? Those same central banks, over 40 countries bringing their gold home from the Bank of England and the New York Fed. We'll get to the Bank of England and the LBMA in a moment. But so you have all of this buzz around gold. What did Judy Shelton say? Judy says, well, we need to peg a 50-year treasury to gold, right? She said that to me, that Trump will issue gold-backed treasuries July 4th, 2026. She said that to me on an interview. She said, look, it is my belief, after all the conversations I had, and who is Judy? She was his nominee to run the Federal Reserve in 2016. She may actually take over for Powell this time. But you see the reshoring of gold under the guise of tariffs. That's what everyone said. It was tariffs. It was tariffs. No, it's not tariffs. And the Bank of England caught on to it. And you could argue that there's something brewing bad in the LBMA with an exchange that's T+1, which means you make a trade on today, that's T+1 is settlement tomorrow. At the third day, the metal should be moving back. They're now saying T+8 weeks because of a shortage of trucks. And we're supposed to believe that the Bank of England doesn't have enough in the way of trucks or manpower to move all that metal back. So all this gold is flowing here to the U.S. And what do we keep hearing about? Let's revalue the price of gold. The head of the Dutch National Bank, members of the Bundesbank, James Rickards is talking about it. Senator Loomis from Wyoming is talking about it. Where is gold held? Well, ironically, in every Western central bank balance sheet in the gold revaluation account. Every $4,000 increase in the price of gold gives the Treasury General account $1 trillion free and clear. We can get into how that works too if you'd like. But the point of it is, is that we've all been conditioned into believing that gold will go up and then get killed on the way down. And nobody is noticing the fact that it's outperforming everything. And it has strength unlike anything I've ever seen. But put it in the context of it being reclassified the only other tier one asset next to treasuries and the central banks buying it hand over fist. And we're even hearing of systems pegged to gold, like the BRICS. And Dilma Rousseff, the former president of Brazil, said, we've agreed in principle to a settlement currency called the unit, 40% gold-backed, deliverable upon request by central banks. Gold is becoming something far bigger than we are being led to believe, and it continues to march higher unabated with virtually no retail participation. We're nowhere near the end. So I think, to me, the tariffs are a distraction ultimately, because if he pushes it too hard, you will see a pushback that I think will shake things up very, very badly. Let me give you one other example of what I mean by that. We just saw the other day that China, let me find the exact quote here. China, the People's Bank of China, announced its digital RMB. Now this, what I'm about to mention, is Enbridge. Now, the BIS pulled out of Enbridge and embarrassed them, the Bank of International Settlements, embarrassed the BRICS at the 12th hour, saying, well, we can't be involved with any entity that is being sanctioned by the West, just realizing that Russia is the R in BRICS. And really, it's almost espionage, as I talked about at your show. But listen to this. The People's Bank of China announced that its digital RMB cross-border settlement system is now fully connected to 10 ASEAN, they're Asian countries, and 6 Middle Eastern nations. That this development enables approximately 38% of global trade to bypass the SWIFT system. And get this, in practical terms, digital currency bridge has significantly reduced cross-border payment processing times from the typical 3 to 5 days associated with SWIFT to 7 seconds. And so you have 40% of the global GDP now connected on a system outside the SWIFT. You keep pushing like this with tariffs, and things will get nuts. And he's either going to realize that or the system's going to reset. Either way, people should be focusing on gold right now, and not expecting the other shoe to drop. It just seems that there's something big in store for gold.
Yeah. Okay. A few threads I want to pull on there. Thank you for that, Andy. So, I kind of echo some of your thoughts about the trade deficits not really adding up. When you're the wealthiest country in the world, you're going to run deficits with pretty much everybody. It's inevitable. You can buy more of their stuff than they'll ever be able to buy from you.
Right.
So that's not a novel problem. Every superpower has always faced that, especially during the sunset years. And it's sort of hard thing to reconcile. And so I heard that and I was like, it doesn't make there's no substance to that. Right. And as you begin to push these countries up against a wall, to look at, you mentioned the 10 ASEAN countries, those are the 10 countries that make up Southeast Asia. It's like 800 million people in those countries. For them to choose a side, right, if the two sides are the US and China, that's as ludicrous as telling Canadians they have to choose a side between the US and China. It's like proximity really matters, right? Look at the region we're in. There's a reason Canada, US, $1.2 billion worth of goods cross the border every day. It's because of proximity, right? It's proximity. And so to tell the Southeast Asian countries they have to choose a side, look at the region they're in, right? Like you could never beat the economics of trading with somebody so close to you, right? And so you're drawing these lines in the sand that just don't make good economic sense, which makes me wonder. But I like how you framed the beginning of it. You're like, it's not about, the only thing that really matters is can we keep these countries buying our treasuries? Because that's the oxygen, right? And if you cut off the oxygen, nothing else matters, right?
Right. And we have $6 trillion in treasuries that come due next month, Jay. $6 trillion that come due next month, and $28 trillion that come due by 2028, with only $15 trillion projected in tax revenue. That gets us half the way there. It doesn't take into account the spending between now and the end of 2028. So, I mean, it's math. It's all about math. And, it almost, and this is where conspiracy theories are born. It almost makes you think, is he trying to incentivize some sort of a reset? The guy that's the master of the bankruptcy. I'm not saying that that's what he's doing. I'm just saying it doesn't add up. It's not logical. You should come in with the carrot, not the stick. After 4 years of what we've done around the world, it should be more about mending fences rather than playing hardball with these countries. And tariffs threatening the BRICS nations are not tariffs. They're sanctions masquerading as tariffs. Tariffs protect the manufacturing industry, not if you don't do this and you pay 140% tariff. That's not how it goes. So you wonder, like, is he trying to push us over the edge here to see that ultimate dumping of treasuries? And you saw what happened last week with the basis trade, where you have this blowout of the treasury market. At the same time, it's rattling confidence of these countries who are supposed to hold our treasuries when we need them the most. And their net, there's been nothing but selling since 2014. No new buying of treasuries net since 2014. There's been a lot of central banks selling, but some buying, but more selling. And at the time we need them the most, with all this debt coming due, he's certainly rattling the saber, maybe a little more than he should.
So you mentioned the gold price not getting any retail attention whatsoever. I completely agree. There's very few headlines covering the rise, whereas had gold rocketed up, 2 years ago, 3 years ago, it always made headlines. And now we're hitting all-time highs consistently, somewhat covertly, and no one's talking about it. And it's curious to me as to why. It's almost like, I don't want to get into collusion, but why would it be, whose interest would it be in to keep the rise of gold a bit quiet for now? Or am I going,
No, I mean, there's a fine line between conspiracy and reality, Jay, and it's no longer really conspiracy. It's certainly the biggest banks in the world it would benefit perhaps even the United States if they are trying to play the long game with gold. Judy Shelton is right, and they're going to peg gold redeemable on 50-year treasuries next July. Then the first thing to do is reshore the gold and slowly let it rise. And it has been rising. And I'll get into one thing on CNBC in a moment. But to give you an example of the vested interest, at least in some of these big banks who are trying to get out of their positions, arguably, when the price of gold fell by $200 an ounce last week or 2 weeks ago, the amount of open interest that was closed out is off the charts. See if I have the exact number here. I think I do. I hope I do. They more or less, here it is right here. So the commercial banks were very short and the hedge funds were very long. So they dropped the price down and the open interest fell by 125,737 contracts. You're talking so much gold that was sold and covered billions of dollars worth. And then when they close out those positions, the hedge funds, because the price is getting clobbered at 100 ounces apiece, do the math. It's extraordinary, a huge amount. You end up then seeing those contracts being bought up by the commercial banks who take the other side, and now gold's up over almost $300 since then. It benefits the largest banks in the world who need to get on the other side of this. It benefits all those that have been accumulating it, the central banks. I was working out the other day in the gym, and I was in front of an elliptical machine, which was I was on an elliptical machine in front of a TV with CNBC, and gold's at all-time highs, and they have a ticker that goes by, and underneath it, there are boxes that spin. And I saw gold, all-time high, at almost $3,300, and it was 47 spins of the box before gold came back up again. I noticed it, and then I started counting it, 47 spins in between gold once, and then bang, and the other spins would be like 10-year Treasury, Dow Jones, NASDAQ, Nikkei, blah, blah. And there's three boxes, and I'm looking, no gold. 47 spins later, there's gold, but in the interim, Bitcoin came up 9 times, or Bitcoin futures. And so, I mean, there again, fine line between conspiracy and reality. But if you would have told me at any point in my career gold beat 3,300 and you don't see it anywhere, no one knows it at all, I'd eat my hat, and here we are. This tells me we're very early, because the only ones buying it, Jay, are the most well-informed traders in the world. The central banks, the sovereign wealth funds, and the commercial banks, they're positioning always ahead of the little guy who here we are at 3,300, hasn't even realized it yet.
That's a really interesting observation that there was a 47 whatever rotation of data before you saw the all-time high gold price again, but they were rotating the BTC price every 9,
Yes.
by comparison. And again, makes you cock an eyebrow and be like, what? If it were my channel and I was controlling the content, I would be aware of what I'm giving a bigger emphasis to. I am when I do that, right, on my show and all this. So it's intentional. It's not a mistake, right?
Well, that's a good point. I mean, you would expect to see nothing but resource content on this channel. And, if all of a sudden you start seeing, Beanie Babies or something, well, you got to wonder,
Jay's
that's
getting
probably
paid for Beanie Babies.
Yeah. Well, it's probably a poor description, but it's interesting that you note it that way. And that's right.
Mm-hmm.
What is the vested interest of the content creator or the drive? Anyway, so that's part of the reason. And that's why we're so, I was talking to Rick Rule yesterday or 2 days ago. And again, his view is 1/2 of 1%. That's it. That's 1/2 of 1% allocation of metals from Joe and Jane Sixpack to the Harvard Endowment Fund across the entire financial matrix. So we're way early in this game. And as usual, the big money is always positioned nicely before the move is made.
Now, I can't recall if it was on Tucker Carlson or the All In Pod. One of the interviews that Scott Bessent did, he outright said verbatim, revaluing gold is not on the table. You take that at face value, or maybe you shouldn't at all take it at face value. But it struck me as like, is there vulnerability if the U.S. were to revalue gold in that they don't know how much China has, they don't know how much Russia has. And so that's a bit of a gamble, right? That could pay off horribly. What's your take on that?
I think he may have been told to shut up because he talked about it too soon. I don't believe it. I think it is on the table. I mean, it's ironic. It's held in a gold revaluation account. Even marking it to market would be smart. And what if another country just marks it to market? Isn't that really what the price is? If all of a sudden, Germany and the head of the Dutch National Bank say, we're going to pay $3,300 for anyone that will sell us their gold. And okay, well, that's what the price is. What if China says that's what the price is, and their Shanghai Metals Exchange starts pricing gold for delivery? We'll buy it at $3,300 an ounce. Isn't that what the price is? Price is what someone's willing to pay for it. Yes, it's valued in dollars right now, but this is the whole problem of the metals exchange, where on the LBMA right now, they have roughly 36 million ounces of gold standing behind 280 million ounces of spot contracts that could stand for delivery. Do you see a problem with this system? And the same thing is similar in gold on COMEX. And so the world is, we're seeing the talk of a BRICS gold exchange. We're already seeing way more volume at the Shanghai Metals Exchange and in Dubai than ever before. But if the BRICS Metals Exchange comes up, it's more so about control than anything, because the West controls the price. When they were building the BRICS grain exchange, the guy that's behind it said, look, we produce and consume more wheat than the West does, but we can't control the price. It's done so on COMEX. But that will change, he said, with the building of the BRICS grain exchange. You don't think they understand that same thing with metals? See, they just have a very slow, monotonous, long game plan where if they threw all their money at it and just drained the exchange like that, it's over and the whole thing would blow up. Like the LBMA is saying, we don't have enough trucks to deliver right now and doing it slowly. But so they'll build that exchange, and ultimately price will move there to the not only the people who own the most gold and produce the most gold, but who understand it best. And so maybe that's kind of what this drive is, to repatriate it all and maybe beat them to the punch. I don't know. But I will tell you that in my heart, in my soul, I believe gold will be foundational to a new system, a system that will be about transparency. Like Zoltan Pozsar said, Bretton Woods 3, it'll be about transparency. It'll be a marriage of blockchain and gold. So you have this form of immutability. And it just seems that's where we're moving in every single way, starting with its revaluation to a tier one asset. So, that's my position. I believe it in my soul, and maybe I'm wrong, maybe I'm not, but I will tell you something bigger is going on with gold than we're being led to believe. It is moving in a manner that I've never seen in 35 years, in strength that is defying everything that us in the gold market have ever seen for the last 3 decades, for sure.
Yeah. Well, in hindsight, it'll all be obvious, won't it? We'll look at so many of the activities over the last 5-10 years. I think central bank buying will be the biggest one. We'll look at that and say, the writing was all over the wall. Like this was very obvious, but in hindsight, everything's
Well, look, Goldman Sachs is saying 4,500 by the end of the year is a possibility. They were calling for 3,700, as it could get as high as 45. I mean, can you believe you even hearing that with your ears? Well,
yeah.
I guess we'll have to see.
All right. Let me ask you something. So I had Jeffrey Sachs on my show this week, and we were sort of getting into the US-China competitiveness, right? He won't call it a trade war, geopolitical war. He's like, that's the Western mindset. Everything's always like steep competition and war. That's not the mindset in the East. And so let's get away from that. But he said the biggest problem the West is running into is a misunderstanding of basic Chinese philosophy, meaning that, you and I grew up in the West from a place of we value individual prosperity. Probably. I think you do. I think I do. Most capitalists do. If I work hard, rise up on my own, and everybody else does the same, we're all better for it. So individual prosperity is what we value. And that leads you to a competition mindset because it's sort of ingrained within that. Whereas, as he describes, Chinese culture values collective stability far more than individual prosperity. And if we are collectively stable, we will all rise up together. So the end goal is the same. The strategy is different. And the risk he outlined to me was we're looking at these geopolitical conflicts and competitions and trade wars as like a winner take all. If someone else is rising, they're a competitor to us. And we're fighting a battle in two very different ways. Now, a lot of people push back and point to all the nefarious activity of the Chinese establishment. And it's easy to do that, right? Censorship, authoritarian rule, human rights abuses, all this stuff. It's not just about a, collective stable economy rising up. But what's your take on that, Andy? It's tough for Westerners to wrap their mind around the motivations of an American administration that's so focused on China if you don't understand Chinese psychology whatsoever. Do you ever think about that?
I mean, they think in terms of decades. They think in terms of we think in terms of minutes and seconds. They're thinking in terms of decades. I mean, one way I think of that is their state-sponsored gold program that they've had now running for 4 or 5 years, where this is why you see so many deliveries coming out of the Shanghai Metals Exchange. It's to their own people. And so they have been telling their own people to buy gold and silver for the last 5 years. And through the state-sponsored savings programs that are then delivered right through the Shanghai Metals Exchange. They're now opening it up to their insurance companies to invest, starting with their 5 or 6 biggest insurance companies, investing a very small portion of their assets into precious metals. There's talk of opening it up into other insurance companies, their entire insurance industry. They are slowly not just accumulating gold for themselves, but making it a priority for their people, which would support what you're saying, that they want prosperity for their people. And, that's, I think, something that to me makes a good deal of sense. You're really defined by the strength of your nation as a whole. And if you can enrich your populace, Alistair MacLeod, one of the smartest human beings I've ever met, 3 years ago said that they had 38,000 ounces, not the 3 that they claim they have. And he said that the people had 18,000 metric tons and the state had 20. Well, if that's true, that the people alone would have over 3 times what the United States has. That they would have 2.5 times, well, just 2.25 times what the United States supposedly has alone. That's before the state. So, and again, I can't substantiate or verify that, but I can tell you that they have been through this state-sponsored program buying gold continuously for several years now. It makes good deal of sense to me. I mean, I think that it's something that could actually play out quite significantly if all of these things are true and the price is revalued. You've not only enriched the state, but the people themselves too, tremendously. You talk about all of these, all of these ghost cities and this and that. Well, you just completely enrich your people, and things change a little bit. And so, yeah, I'd buy it, to be honest with you. From everything I see, it makes good sense to me.
I want to get back to your comment at the front end. No, headlines aside, the only thing that really matters is can we keep the rest of the world buying U.S. Treasuries because that's the oxygen that this economy needs. You also mentioned there's been no net buyers of Treasuries since I think you said 2014. I think that's the year. Do you see anything, Andy? Because that's stark, right? If the most important thing is to keep the rest of the world buying U.S. Treasuries, and there's been no net buyers since 2014, that's tough. Do you see any strategies, policies coming out of the administration that would lead you to believe they can turn that trend around?
Yeah, it's if they follow Judy's trend or Judy's recommendation.
With the
Peg,
50-year peg to
yeah.
gold
And in
treasury?
her book, she says we start with 50 and then issue shorter duration treasuries as well. And she told me in my interview that her intention would then be to issue stable coins off it. So if you look at what's supporting that gap of central bank buying in many respects has been filled by the stablecoin market right now, where Tether, which was in trouble by the Treasury, somehow miraculously isn't, but their balance sheet changed to almost all Treasuries. USDC, almost all Treasuries. The new Ripple deal, almost all Treasuries. So every time there are stablecoins that are used within the crypto system, it's supporting the legacy system, which is the cruel irony of it all. And so if you issue Treasuries, and Judy said, then we'll have stablecoins issued off of them. Again, these will all support the Treasury market. So not only do you have a Treasury that is redeemable in gold, which will incentivize demand, you issue stable coins off of them, which are backed by more Treasuries. It's, to me, there are very few other things that you can do, because who wants to buy a Treasury earning 4.5% for 10 years by a country that's, if you look at what real inflation is, not the lie coming out of the Bureau of Labor Statistics. I mean, you could call it the CP lie and take the L out of the BLS, and that's a better representation of the inflation. But John Williams of Shadow Stats will say add an 8 to it. It's 11%, not the 3 we're being told. And if you shop in a grocery store or take your family out to a ball game or out to dinner or whatever, that inflation is not really coming down like they say it is. So, yeah, who wants to buy a Treasury when we're inflating away the currency? And you look at the instability of the Treasury market, where, there's greater volatility in the Treasury market over the last few years than in gold. That's something you never saw before. So, plus it can be sanctioned and weaponized. So, yeah, I think that's the only way you turn it around. And then that goes hand in hand. Would they revalue gold? I don't know. Is it ironic that it's held in the gold revaluation account? Roosevelt did it. Even Nixon did it. When Nixon closed the gold window in 71 at $35 an ounce, the next year he revalued it to 38, and the next year to 42.22. And that means the dollar devalues, which is what Trump wants. Gold goes higher. And, well, if you have reshored it all and you continue to take delivery of it. And it's funny, you talk conspiracy, the line between it. JP Morgan always chafed my rear end that they were allowed to continue to be the custodian of SLV, the world's largest silver trust, after paying a $920 million fine for manipulating the market. But they have now taken over as primary custodian, with BlackRock in both instances, as the primary custodian of GLD. And in 2 vaults in London and in New York, they own more gold than most of the G20 countries. So you want to talk about like conspiracy? Well, they could close those 2 funds on a Friday night, take all the gold, take all the silver, put dollars that they print into your money market account and say, what? We didn't break any laws or infringe any civil liberties. You can't take possession of the metal out of those accounts. Only the big commercial banks and funds that funded it through what's called a basket can, but the rest of us can't. They could have their cake and eat it too in one central location held by the banks that pay fines for manipulating the market. So there is this fine line. I remember speaking at the Sprott show years ago in Vancouver and saying JP Morgan's manipulating the market, and showed all sorts of charts. And Doug Casey got up and said that could never be true. That could never be true, he said. As much as I appreciate what Mr. Schectman said, that can never be true because the traders can't keep their mouths shut long enough. Well, evidently it was true, and they admitted to it, and they paid a $920 million fine, the largest ever by the Justice Department. The point is that a lot of these things that seem conspiracy, that just have so many things that make you say, well, is it really? Or, I mean, is it just coincidence? I don't know. You tell me. Sure seems a little bit more than a coincidence. Not saying that it is, but who knows? I just simply think that I think that gold will be tied to a new system, and I do believe it will be through something like Judy's Treasury. She told me flat out Trump's going to issue them July 4th, 2026, 250th anniversary. So we'll see if she's right.
Could you explain the mechanics of that a little bit? A gold-backed 50-year Treasury, and how that would function, Andy?
Redeemable at the maturity in gold, and it would be either a very low coupon or a zero coupon bond. And so someone may say, well, why would I buy a Treasury instead of just buying the gold itself? Well, because it's backed by gold, so it's going to have the movements with it, but it gives you the ability to trade it with liquidity. The way the Treasury market works now, and you have the ability to redeem it in gold, which is your inflation protection. And then ultimately she would issue Treasuries of shorter duration, redeemable in gold as well. So, as it is right now, you're getting paid an interest rate, and then at the end you get your money plus the interest. Well, here same thing. You'd get at the end you'd get your gold back, and so it offers demand and I guess authenticity in an asset class that's supposed to be the safest in the world, that has really taken it on the chin and is losing credibility. So I guess it's just a way to establish demand for an asset, a promise, a physical promise instead of a paper promise.
Right. Like an inflation-resistant Treasury.
Yep.
Yeah,
Yep.
Interesting. Any idea why she predicts July 4th, 2026?
She said they've had lots of conversations about it. That's the 250th year anniversary of the country. And so if you look at the moves they've done since November, we've become a net importer of gold, and all the gold's slowly coming in, and JP Morgan takes over. What is gold? The only other tier one asset. Gold keeps flowing in. You onshore, reshore as much as you possibly can, slowly let the price rise like it's been doing. And then if you decide to revalue it to a different level, you don't have as far to go from where it is because it's slowly rising and no one's talking about it. I mean, it's up 40%. No one's saying a damn word about it. It's just crazy to me. And then you peg it to the Treasury. We're issuing new Treasuries because, no one's buying them. Well, if they're redeemable in gold and that liquid and that tradable globally, then hey, maybe you're on to something. But it's a 250th anniversary of the country. And she told me in my interview on my YouTube channel that he has told her, and they have discussed, that it will be, she said flat out, he'll issue them July 4th, 2026.
I mean, the symbolism's not lost on me. Even this recent 90-day pause in the tariffs on everybody but China, that 90-day pause puts the next announcement on July 4th. I mean, the administration knows marketing, if nothing else, right?
Yeah. And, there are no coincidences either, probably.
Yeah. Okay. Interesting. I guess back to the current administration then, in Trump's first term, he really pointed to the market as his scoreboard, right, of performance. It was like the direct correlation to how he was doing was the stock market. And obviously, early stages in this term, the opposite's been true. My assumption is that that's really going to change right before the midterms and the market's going to be ripping. But any thoughts on that or any take on that, Andy?
Well, again, we owe $6 trillion that come due next month. How do you refinance it at higher interest rates? What he was basically doing, I mean, if you're talking just a guess, my guess was try to talk the market, let the market fall, talk it down. I don't care about the market. It goes down. But what's supposed to happen is that Treasury yields are supposed to go down simultaneously. In other words, you're supposed to see people leaving this risk-on trade and move to the fear trade into Treasuries. But what we saw happen was something that you never see. It's never happened before that I know of, and that in 3 days, when the stock market, the S&P fell by 8%, the yield on the 10-year Treasury went up by 60 basis points. It went the other way. In other words, you would think people would be buying Treasuries, which would put the yield down. It was the opposite of that. And this is the breaking of this basis trade, where, if you go back to long-term capital management, they're all like prize-winning economists. I think even Nobel Prize-winning economists that created this fund of buying 10-year Treasuries and shorting the 10-year future, which has a slight premium, and capturing the spread. If it goes to maturity, it nets each other out. But if the borrowing cost on the short-term paper goes up so fast, you get a margin call on your position and you have to sell. Well, that's what we saw happen here. These banks, because of Dodd-Frank, can't do anything risky. So they lever the hell up on 10-year treasuries, massively levered, and sell the 10-year future simultaneously and then capture that spread. But the rate went up so fast and people then are forced to liquidate. Selling begets selling. They get margin calls and the rate is blowing out. And this is what long-term capital management need to be bailed out for, or would have blown up the system, they said. James Rickards talks about it all the time. The Fed bailed them out. They're doing billions of dollars. This is magnitudes of that. This is trillions of dollars. And so, yeah, it's crazy. It's certainly crazy what's happened. He wants rates to go down. In fact, they went the other way. Look, the reason he would have said these things in theory is to rush people into treasuries to lower rates to make refinancing easier. Sadly and kind of scary, it went the other way. So I don't know. I guess we'll have to see. We will have to see. Valuations are stupid. They're out of control. And look at it from this standpoint, too. Warren Buffett, who is the greatest value investor in the world, has more short-term treasuries than the Federal Reserve does. He's got, billions and billions and billions in cash. You got a 7-to-1 selling versus buying by the insiders. And all the big CEOs are selling their shares, including Jamie Dimon. So you got to wonder, with the hedge funds having their lowest exposure to the Mag 7 since 2007, did the insiders know something? Are they telling us by their actions where they think the markets are going? I guess we'll have to see. But in that respect, you would think everyone would be piling into treasuries, and this basis trade basically exposed how dangerous it can be when you lever up to the nth degree. And this is just the very beginnings of it. Hopefully it's contained, but who knows?
Yeah. Buffett exactly at like 300 billion in treasuries, I believe, right now. Partially, I mean, that's a healthy check, right? The yield on you don't have to do anything else. I mean, if he's a value investor, you got to find a better trade than holding 300 billion in treasuries and taking that yield.
Yeah.
Hard to find a better trade than that, right? So,
as long as they're short-term duration, I agree.
Right. Yes. Yeah. Good point. In your sort of comment, speculation about just insider information, I tend to think that human nature is the same all the way from the bottom to the top. And we like to maybe assume that at the top, there's more accountability and organization, but it's the same human beings with the same human nature impacted by fear and greed. And of course, I think the activity is just consistent. Why would it not be? Andy, if I could just ask you one last big picture question, and you're thinking forward, 5 or 10 years, what are the major tectonic shifts that you visualize are pretty likely, right? It's really hard to predict things short term. What the Treasury market will look like 6 months down the road, a year down the road, what impact the tariffs will have on trade over the next 24 months. Very tough, I believe, to really forecast that. But stepping back to the longer term trends, things become a bit more clear sometimes. Are there any major tectonic shifts that you think are quite high probability if you're thinking in terms of a decade time horizon?
Well, I mean, I think the nobility of reshoring our we've eviscerated the middle class. You have a bunch of people who have become very wealthy and a widening gap between people who have wealth and those who don't. And that's largely because we've offshored our manufacturing and we've offshored a lot of our middle class, good paying, high paying jobs. And the nobility of doing that is there's something to be said for that. I mean, you could, I always talk about the Shawshank Redemption where Andy Dufresne had to crawl through 2 miles of crap to get to the other side. I kind of say that's what we have to do as a country. We have to get through to the other side in order to do that, but it will go with a good deal of pain. And look, interest rates have been suppressed for the better part of over 30 years and even longer since 1982, which created really, I would argue, distortions in asset prices. And if we are going to reshore and bring all of this stuff back, you're talking about a recession into a very severe depression and reshoring and starting over and resetting I mean, I would like to think there's reason to be optimistic, but there is no way to get to the other side without crawling through that tunnel of crap. And so I think it will be tough times. I really do. I think the rest of the world is realizing that there are other ways to. I mean, would you want to sell your oil that you had to drill out of the ground with energy and effort and sweat for dollars that are being inflated away, for treasuries that can be sanctioned and are being inflated? And I wouldn't, and that's why you're seeing these countries in Southeast Asia and in the Middle East join together. That's why you're seeing the BRICS join together. That's why you see common settlement currencies pegged to gold. So if indeed we are going to break free from that and kind of become more nationalist rather than being the policeman of the world and watching our empire follow the same pattern as the Romans, then there is reason for our children to be optimistic, but it may not be so great for us during our retirement years when things get very, very challenging. Supply chains, higher prices, high unemployment. And you look at AI as an example of what that's going to do to the world. I mean, my son, who works for me now, after he graduated college, I said, go make your own mark first. And he became an accountant at Price Waterhouse, getting paid $80,000 a year, $75,000 a year to live in Manhattan at starving rates, but yet to analyze balance sheets for a real estate investment trust. And it sounds like a lot of money if you're living in, Minnesota or Iowa, but not in New York City. But why do you need to pay a kid $75,000 with benefits to analyze a balance sheet when AI can do it like that? And it's going to disintermediate a good deal of what people, it's going to take away a lot of high paying jobs. It's going to be very deflationary. So we're going to go through some change, but we can get to the other side. We have to deal with the debt first. And we have to bring back our manufacturing, our medicine we have to bring back. I don't know, Jay. I think that the era of the United States being the main superpower financially, it's kind of hard for me to envision that when the Congressional Budget Office says that by 2031, 100% of tax revenue goes just to pay the interest on the debt and mandatory entitlement spending, which isn't even on our balance sheet, like Medicare and Medicaid and Social Security. We have a $1 trillion defense budget this year. That's discretionary. We need to borrow money to finance our defense to go around and police the world. And put it all together, I think that, it kind of paints an uglier picture short term, but he's doing what needs to be done, in my opinion, in order to have a brighter future, prospect of one for our children and our grandchildren. So don't know if that answers it for you or not, but I would guess I would say hard times followed by, the spring and potential for good things here at home and opportunities that we can't even see right now.
Yeah, man. I don't know what just happened to my camera. Here we are. I'm blurry now, but
that's all good, man. It's all good.
I agree with you. And it's very easy to follow like the general cycles of empire argument and look at the over indebtedness and all this stuff. But there's no sure bets in this game, and as you were speaking, I found myself thinking about you mentioned a couple of times the 250th anniversary is coming up, right? So 249 years ago, the British Empire lost the American colonies. And when they did, it would have been logical and obvious that was the death knell in the British Empire. They had invested millions in these new colonies. It was a major part of their economy. When they lost access to that agriculture, that manufacturing base, inflation hit UK. Like they had 30% inflation in the beginning of the 19th century. We lost our minds about 9% inflation, right? Like imagine 30%. And the British East India Company was so indebted to the government. They were like this too big to fail operation. Awkwardly, the industry that pulled them out of this depression was breaking the opium trade into China, right? So there's always a way. Not saying that's the best path, but all that to say, you can look at the British Empire during the end of the 18th century and make some very obvious conclusions that just did not materialize because there are no sure bets in this game. So, yeah. Anyways, look, Andy, it's always great having you on the show.
Yeah.
I appreciate it, man. Not sure how to have my camera here, but I look forward to seeing you in person in January at the VRIC back in Vancouver, British Columbia, January 25th and 26th. And until then, man.
I wouldn't miss it, Jay. And until then, for sure, I'll be looking forward to picking up where we left off. I'll leave you with the thought that, things are getting very interesting in this world. And if there's any opportunity to jump back on and have another chat again about what's happening, which might even be accelerating, I'm always a text away. But until then, I hope you and yours stay well. And thanks for having me back on, buddy. Look forward to seeing you in January.
Yeah. Me too, man.